So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. And welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your highly appreciated business, real estate, or other highly appreciated asset. I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate, financial, business, and wealth minds in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is the managing director of investment science and scientifically sound consulting and investing, and in which he founded in 2014. And it's a management and technology consulting firm, and it serves financial services, private equity, capital markets, and data credit risk reporting companies, providing project and product management, big data architecture, machine learning, investment management, and technology strategy to align corporate objectives and business transformation initiatives. Please welcome to the show with me, Michael Kelly. Hey, Michael, how you doing?
I'm doing well. Thank you so much for having me.
Absolutely. For our listeners getting to know you for the first time, would you tell a little bit more about your story and your current focus?
Sure. So my story is all about the company we started, Investment Science, and I know you stated it's like 2014. It evolved over the years. So it began in 2009 when I was in college with my economics professor for essentially holistic returns. So if you have $100 to invest, that would go into a different financial product, a different time frame, a different strategy. You fast forward 10 years later, it turned more into a holding company for projects in which we're working upon. So some of the key initiatives of the firm really are management consulting, where we worked with some of the biggest names, Blackstone, KKR, Citigroup, you name it, we've been there. Additionally, we've done a lot of projects with C-level executives, CEO, CTO, general advisory. Maybe one week they want us to look at a current state of what they currently have, boost employee morale, analyze financials, you name it, we've done it. It's customer service. We're there to help you provide objective advice without compromise. And that really just means we have no strategic ties to vendors. So if we go into any company, we'll literally give you the most objective advice you could imagine. Whereas there's some premier institutions out there that, let's say they audit Amazon Web Services. They cannot provide you Amazon Web Services, which means you're not really getting objective advice, and you're paying some of these premier institutions significant amount of money. You bring us in, if you're like, I don't know what to do here, I want a third-party opinion, and we're going to run with it with no ties to vendors, you go with us. But that's not to say those companies. Sorry. Yep.
No, that's great. That's fantastic. And we can dive into some of those strategies here in a minute. I want to take one other step back, though, and help me, myself, and our listeners get to know you a little bit better. So, Michael, I believe we've all been given certain gifts in this life. Some people call them strengths. Some people call them superpowers. I think they're God-given gifts, and I think they've been given to us to help be a blessing to others. So, I want you to go back to your high school days, perhaps your university days, and can you think of maybe one or two strengths or gifts that you believe you were given, and how does that help how you help and bless people today?
I think it's just, I constantly, since I've been young, research some of the latest trends. For example, even when I was 19, I read many of the white papers in regards to machine learning. And then we fast forward a decade later, now everybody's talking about those things, or even I'm in college, I'm learning Python programming. Most organizations just started to use those things over the past couple of years. So I'm always trying to stay about a decade ahead. Since I've been young, just constantly researching because I was in college during the financial crisis, and we wanted to determine what's the path forward. You want to work in financial services, but nobody's hiring. How do you differentiate? So it's constantly educate yourself, become well-rounded, strong soft skills, look at the latest trends of financial, and stay on top of technology. So you're a holistic individual where you can quickly adapt to the ever-changing economy that pivots every 2 years, as well as meet new people and make it about them. It's not about us. It's about you. How can we help you?
Love it. Yeah, continual learning, being 10 years ahead, and looking at trends, and then trying to connect the dots for companies and individuals. Is that a fair summary?
Yeah.
Cool. Awesome. Now let's dive right into that. So, what's the number one secret to being taking the advanced trends that are going on right now? And what's the one thing that you're helping people to implement? What is that one thing, and how are you helping people to do that?
And so that would even depend on what your industry is. So, I mean, I come from financial services, and even so, I use my gut, but everybody's different. So you could just analyze what's going on around you. So, for example, Robinhood comes out. What do? They get rid of transaction costs, right? So, what is that going to do to other businesses that relied on those? They're going to cut costs, but then they're going to try to compete and invest in the technology. So, it's almost like we had, the industrial revolution. Now we're in the technological revolution, and that over the next 100 years or so, it's all about the technology, but you still have to have those soft skills and understand the business domain. You don't have to be in finance. It could be any industry. And even the fact, if you're in another industry, it's still applicable to a whole different industry, because it's almost like they can apply that to them from a third party outsider. It's something that some organizations need.
That's really well said. Yeah, technological revolution versus just the industrial revolution, and yeah, the Robin Hood's really interesting, right? The way they've done that, and how people have to pivot. Um, how about real estate? Are you seeing anything in real estate right now that's kind of interesting that sticks out?
Even real estate has to, you could even analyze the M1 money supply, which is technically at an all time high today, from the amount of economic activity the Federal Reserve's doing, monetizing all this debt. They bought up all the bonds. So then you have a low interest rate. But then you have to look at migration patterns, and many individuals left some of these large cities, moved out to the suburbs. So you're actually having the pricing of the cities moved out to the suburbs due to the remote working. So it's always changing, but it's literally understanding where money flows, where people move, where the jobs move to. And then from real estate, it's really all about that: different types of loans, different types of strategies, different types of tax deferments. There's so many things we could talk about with real estate.
Yeah, that's really interesting. And what tools are you using or helping people to adapt, or like is there a Robin Hood on the real estate? Like for financial investing, is there a Robin Hood type of vehicle for real estate that you kind of find interesting?
I mean, I've just personally just used something as simple as Zillow, and I would just look at properties that are a bit like light pink in that area. So the pricing within a specific area where you want to live. But this is more for individuals. If you get into commercial, it's a bit more complicated, especially this day and age where a lot of those companies are unfortunately struggling in the cities, which means those will likely turn into residential buildings down the road once this virus is gone, because it's always about reversion to the mean. We always move back to the average and things get out of whack. And that's why it's important, even a company or an individual, have all these different investments. It's almost like a fishing rod, right? And one of them is going to hit. Make sure they don't move together. But unfortunately, many things do move together because of exchange traded funds, because of all these different things, all the computerized investments. Most things do move together. And you get these outliers that somebody could have lost a ton of money from the stock market crash, but then their real estate shot up. So offset one another. So diversification, I view it a bit differently, that an individual or even a company, even your treasury department, like 1 to 5%, depending on how much aggression in Bitcoin, maybe a portfolio of exchange traded funds or even bonds that pay in different timeframes in different currencies, right? Because they're paying on different dates and those currencies fluctuate and they correspond to different economic events. That's providing proper diversification, where we see some funds that went bankrupt, even most recently with some of the banks of the, can't recall the name off the top of my head, but one of the funds just unraveled. And that occurs from too much leverage, taking on too many positions, or there's no liquidity to get out of it. It's always about risk reward. Even if it's not finance, it could be any business. What's your risk you're taking on this project? What's the reward? How much does it cost? How much can you lose? What's the probability you're going to succeed? And always expect you won't succeed, but still be optimistic to hit your goal. Be realistic about the worst possible outcome. And many of these firms go out of business when they're always expecting positive things, because some of these funds are over leveraged, that they're getting 15, 30% returns. But the minute we have a black swan event, they can't get out of these positions and they go bankrupt. So it's always be ready to pivot with the economy every 2 years. Always be on your toes. Always obtain that education. Always work on your own projects. Have some work-life balance on top of it, and continue to innovate.
Love it. I mean, when your book comes out, let me know, because it's a fascinating topic. I want to kind of narrow in on a couple of things that you said there: diversification, liquidity, and even on debt. So, how important is diversification, liquidity, and getting out of debt? And what many would think is a very high bull market run, and perhaps things could shift on another black swan event.
Well, even debt, right? Many people on a, and I'm not a registered financial advisor by any means, but this is just my own personal opinion, but many individuals always view debt to be bad. And I always question them that if you just study economics, it's so much different now than even 20 years ago, that you actually require debt. You must have it, or you cannot, I'm not going to say survive, but you're missing out just because of how low these interest rates are, right? You study the interest rate, it's been low for the past decade, right? We have Amazon, we have globalization, India is the number 5 economy, and things of that nature. And it's even how you analyze things around you, even China with their numbers. You could take a look at like the Baltic Dry Index, the average cost of shipping. You could look at countries that ship goods and services to them, like Australia. You could look at that country's electrical consumption, right? These are some things that could be a bit more accurate on some of the numbers. You could look at how much solar power they're generating on top of the electrical to get numerical facts of countries, organizations, companies, apply that to all aspects.
Excellent. So let's talk about diversification, liquidity for a second. So, how important is diversification, having liquidity in today's marketplace?
Even diversification, right? They need to do it in a certain manner that they move with the trends. So even treasury departments on a conservative side, put 1% in Bitcoin at least. It's very volatile, but it's almost like that offsets other things. And you can have too much diversification of too many things, but you also have to do some of the back testing of how these asset classes move together, which we've documented that most stocks, most of them move together. Like if you have a drawdown or a crash, almost, I don't know off the top of my head, but it's like 95% plus will move together. So are you really obtaining diversification? My only manner that I think we could have diversification today is that 1% of Bitcoin. It doesn't have to be bonds, but fixed income instruments that pay on different dates, different maturity dates in different currencies. Maybe they probably have them, bonds that pay in Bitcoin, but it just means because those currencies fluctuate like this. And if it's all on different dates, you on top of the companies that are paying those out, that's the best diversification I could think of on top of having some real estate in the portfolio, even on a corporate level on top of it.
I love the way you think. Yeah, fixed instruments, different maturity dates, doing a little bit of crypto, Bitcoin, um, and then that the fact that that's interesting. Yeah, most stocks move together, 95% move or transfer together. So this diversification to real estate now. What's your take on how to diversify within real estate? What do you like? What don't you like?
I personally like you purchase real estate of things you're okay with keeping forever. I'm not into flipping. I think you should hold on to only buy it if you like it. If it loses 50% value, you're okay to keep it still. Right? You bought it for that, but you also ran the numbers. Uh, it would almost be like have insurance policies, but have them in the same area that if something breaks down, if you're going to rent it out, you're able to service that. And some of the commercial guys, if they were overly concentrated in commercial, this downturn they got burned. So it's the same analogy of some of these funds that went down. It's some of these commercial companies that didn't invest some of their capital in some of those strategies I talked about. That's something like we could probably help them with, just thinking differently, right? Challenging the norm and applying, I don't want to say new methodologies, but just looking at it from a different perspective.
Yeah, no, very well said. Also, I was meeting with a very, very wealthy real estate owner, and he's selling about $50 million worth of assets. And he's looking at the deferred sales trust to use to defer some tax and get out. And he said it's not so much management anymore; it's maintenance, right? And I think sometimes that's where you have to, like you're saying, purchase real estate, own it forever, and realize that you need to have a maintenance team, to fix these things because it never stops. And he basically is
Yeah.
debt free. He's just like, it just never ever stops. And he was, I'm just getting tired of just something broke. I need to fix something else and do something. And I'm just like, I'm ready to move on with my life, but I feel trapped by this capital gains tax, which is part of why we're going to shift here. And I'm curious what you think and what you found, and apply the objectivity for what you guys do. So we specialize in something called a deferred sales trust. It eliminates the need for the 1031 exchange. It gives you the ability to diversify into stocks, bonds, mutual funds, hard money lending, real estate, no timing restrictions. It's an installment sale essentially. And so from your perspective, if you're coming in and you're gonna try to be objective and bring different things, what would be the questions you would ask for somebody who might be considering this?
Well, even that, I would tell them to talk to a financial advisor or an accountant or a CPA. But I just know it from out of a hobby. So it's like if it was a corporation, if they wanted my opinion, I'd give it to them. But they may have a team that handles that. But that's almost a whole separate discussion. Like I learn on a daily basis. Like even I found out that South Dakota is some type of a tax strategy with capital gains tax that are at 0%. I'm aware that Puerto Rico has some tax strategies that if you register companies there, there's beneficial. I think you have to give them 5 or 10,000 to register a company. There's also Delaware for foreign corporations that are not in the United States. So I'm not telling people not to pay tax, definitely pay tax, but if there's strategies to mitigate them a bit, even with real estate, and I can't recall the exact law with it, but it used to be like a like kind of exchange
Yeah,
that
the
if you
1031.
sell
Yeah. Mm-hmm.
it 10 I think they still have that.
Mm-hmm.
So real estate is really just perpetual debt, perpetual deferrals of taxes.
Mm-hmm. Mm-hmm.
And
Exactly.
you
Yeah. What's the biggest frustration perhaps you've seen? It could be in clients with highly appreciated stock or business sales when it comes to capital gains tax deferral. Anything come to mind?
um I haven't seen too many complaints with it's more with high frequency trading software that's buying and selling every minute or day. Like they're probably getting slammed with taxes, but even if you do different types of instruments like derivative instruments, they're taxed a bit more beneficial. Even spot FX is taxed a bit more beneficial. I believe it's a 70/30, like 70%. I'd have to reference it online. I don't know off the top of my head, but it's something like 70% uh, long-term capital gains tax versus 30 short. Whereas if you did it with a stock, it's 100%. So
Excellent.
it's like different asset classes too.
Yeah, and by the way, we're speaking with Michael Kelly, and he is the managing director of Investment Science, scientifically sound consulting and investing. And you can learn more about Michael at his company website, which is what, Michael? Can you remind us what your company website is?
Sure. It's investment, one word, investmentscy.com. And that has all of our consulting, white papers. Uh, we have other projects that require venture capital funding, but that's more for accredited investors. So you can still go there and reach out to us. We'd be happy to get back to you.
Yeah, excellent. And so, that being said, are you ready for the lightning round?
I'm sorry, the lightning round?
Yeah, the lightning round. Yeah.
Let's do it. Sure.
All right. Knowing what you know now, Michael, if you go back to your 20 or 25-year-old self, what's the one golden nugget you would make sure to tell yourself to do?
I would say sleep more. I didn't sleep so much when I was 25.
Got it. I like it. Sleep more, right? Just get more rest, better health,
Better memory too.
better memory too.
So
Excellent.
it's actually bad for your skin if you don't sleep at least 8 hours a night too.
You can level up your skincare there. I like that.
Yeah.
Second question: number one book you've recommended or gifted the most in the past year?
This past year, I wouldn't say I've read so many books. I read a lot of articles. I build a lot of my own projects. And although I have not had a chance to read it, many individuals keep telling me to buy the book, read it, Don't Make Me Think. It's some type of user experience book. That's on my to-do list. If you're selling a product or building it, you don't make the individual think they can see all these icons. I haven't read it, but I've heard from everybody that's one of the best books.
Read it. Don't make me think. I like it. Okay. Yes. Yeah. You get. It's like the dad on a Saturday, right? He gets the box in the mail, and he's like, "Okay, I got to put this thing together. I can do this the fast way, or I can sit here and read this thing." So that's what I'm picturing in my mind. Sounds like a cool book. Question number. Well, we don't know though because we haven't read it yet, but it could be that's what it is. So check it out. Yeah. Question 3. What are you most curious about right now?
I'm just curious as to what the long-term impact is of COVID. Like, I'm curious if some of these companies that are relocating positions in different states, is that long-term? Or is that short-term? Are they moving those positions back to the cities? Are they keeping them out there? Or are they just reacting to, I don't want to call this a short-term event, but I foresee sometime by next year. Obviously, in some other areas that aren't as densely populated, it could be sooner. People will be back in the office. Things will be a bit more back to normal because of the vaccine, but I just don't know what that means for the whole world. What with COVID, is it the new normal, working remote, or is it a 3 days from home, 2 days in the office?
Very well said. I'm curious about that too. Next question. Best negotiation tip.
I just think when you're negotiating, don't give your hand up front, right? But also be respectful of the other side. It's not all about a transaction, it's about the relationship. So if you have a positive relationship and trust, they'll negotiate with you in a kind manner. And if the other person's not willing to go to the price point in which you seek, you could politely decline and maybe follow up in a future point in time when you could both agree to a better price. So yeah, your personalities have to match to even get the negotiation going.
Lots of wisdom there. Love it. Best investing wisdom that you ever received from somebody else.
I think just learning options trading strategies. I was taught that years ago. I knew nothing about them, and now it's more about, if you're referring to derivative instruments, which means we derive our value off of something else. If we talk about options contracts, we can lock in a price for a specific financial product or company into the future. And they tend to use the Black-Scholes model. And if you take a step back, what is that? It's a math model. We have volatility, right? How volatile is this instrument? The more volatile it is, the more expensive it is. How much time? How long do we have this for? The longer that is, the more expensive. And it's important to know that I didn't discuss touching all the data points because it'd be too long of a conversation. But even with the volatility, it assumes constant implied volatility. So if a stock crashes 10%, it assumes into the future that's constant, which means it's over or underpriced during times of extreme volatility. That was something I didn't know until someone taught me.
Love it. When do you know you have enough data to take action?
I think you have to test your hypothesis off of when we said enough data. What is enough data? It could be the Wikipedia corpus, right? Or you need other large data elements to compare something to, which you could shrink that down for your hypothesis, but you need something to compare a generic, which means, do I want to rate something positive or negative from text processing? Well, there's already a Wikipedia corpus. It's a collection of text. You could bounce it off that. Now I have a new hypothesis that's not positive or negative. I might create my own data set now, but I've already validated off of a larger data set.
Fascinating. A little bit about my head, but I like the way you said it. So testing the hypothesis is the key there. Excellent. Next question. Best leadership quote or theme that you strive to live by?
I always liked Mike Tyson's quote that everybody has a plan until you get punched in the face, which is kind of true. Even in business, yeah, you have this big project plan, but then something happens. It's just a plan. So you have to be on your toes.
I love it. That's so good. Last question, and we'll let you go. After all your success and helping a lot of companies, financial institutions with big projects, make big decisions based upon data and objective reasoning, how do you stay centered in your values, Michael? And how do you stay encouraged to charge forward to reach new goals?
Yeah, I just always keep our core values with integrity and honesty. Make it about the customer. So even on consulting engagements, if they just want us there for 4 weeks, then that's fine, right? We're just there to help you. So I bring that into my personal life too. Try to be kind to others, but don't take kindness for weakness, right? Still stand up for yourself, like be kind to others because life is tough for some people.
Mm-hmm. Very well said. Well, Michael Kelly, it's been more than a pleasure. I know I'm better for it. I'm challenged for it. And to grow my intellectual pursuits here, you've really helped me and provided a lot of knowledge. I want to thank you for sharing part of your story, sharing so much wisdom with us. When your books come out, make sure to let us know. Come back on the show and talk about those books, because I feel like you can write at least 2 or 3 on this one conversation alone. I want to encourage you to keep using the gifts and talents that you've been given to be a blessing and help to others. And with that, would you remind our listeners one last time where they can find you?
They could find Investment Science at www.investment.com. And thank you so much for having us.
Absolutely. And thank you for our listeners. That wraps up another show of the Capital Gains Tax Solutions podcast. We want to thank you for listening. And you can go to capitalgainstaxsolutions.com to learn more about the deferred sales trust and how that can help you or a client defer capital gains tax on a highly appreciated business, primary home, cryptocurrency, stock. You can even save a failed 1031 exchange. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, again, such as the deferred sales trust, is the best way for you to exit your business or real estate. Hey, we appreciate you being a part of our listenership. Please rate, review, subscribe. Thanks, everybody. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.